Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick on the show today. The earnings parade continues this morning, actually over the weekend with Berkshire Hathaway, but this morning we have Newell Brands, Cardinal Health, SeaWorld, Tyson reporting, so we're going to run through those earnings reports as well. We're going to talk about Qualcomm, which has not stopped going up since its Dutch auction last week. And we have two guests on the docket this morning. Our first up at 8:15, throwback, Fari Hamzei. He will join the show. He's the founder of Hamzei Analytics. He'll join us at 8:15. And then at 8:35, we are going to be joined by the goddess of grain, Angie Setzer, the vice president of grain for Citizens Elevator, to get her thoughts on how the tariff has sort of impacted her life in the past few months. Joel, what's happening overnight in the S&Ps?
Good morning to you, Spencer. How you doing? Did you have a good weekend?
I tried. I had a mostly good weekend. Yeah. What about you?
Oh, good. I'll get in that in 1 second.
Okay.
Just want to break down the S&Ps here. We're trading up a half a point. Strong day on Friday. Closed near the highs of the week. 28.45 is your pre-market high. But all the pre-market prep traders are going to be focusing on our July 25th high, 49.50. That's a big number to get through for new all-time highs. On the downside, pre-market low, 35 even. That's your daily pivot. Underneath that, we don't have a lot until 28 and a half. Crude oil up almost a buck here, 69.47. Found a lot of support off the open. Just trying to climb into the $70 handle. So we'll keep an eye on crude, see if we get a close over 70. Despite a bullish article in Barron's about gold is down $5.90 at $12.1740. Silver inching its way towards $15, down 12 cents at $15.34. Let's bring in Triple D here. Dennis, how you doing?
Doing pretty good. Tired today. It was a long weekend, lots going on, and I feel like I ran a marathon.
You didn't. You know what? Good thing you weren't with me and Lisa this weekend then, because
what you guys do?
We got a couple swims in Saturday and Sunday, but Saturday
Lisa swims too with you?
Hell yeah!
I didn't know Lisa swam too.
Yeah, and I only give her instruction like every time we go. She gets a little mad at me. She just tells me to just leave her alone and let her swim. But on Saturday night, we went down to Motown and we saw a concert that started at 5 o'clock. We got there about 4:40, 4:45. It was Brandon Lay, Old Dominion, Thomas Rhett, and Kenny Chesney. The concert
went, KC too.
Yeah, went from 5 to midnight. Can you believe that?
Wow.
Yeah.
And where was that? At the Hart Plaza, or where was
Ford,
that?
Ford Field.
Oh, okay, down at Ford. Nice.
Yeah, so my legs are a little tired from doing all that dancing on Saturday night. But
you were giving her. So you had a pretty good weekend.
Oh my gosh. Incredible concert. Country concerts are wild. But
nice.
Anyways.
We had Georgian Bay boating all day yesterday. So you're out there in the sun, the heat, and awesome day. Perfect day for it. I mean, the weather was 90 degrees, so it was warm, but when you're in the water, it feels great. So just the sun beats on you all day, and you're like, you coming today? And I'm like, holy cow, I'm tired.
What are you and Samir doing working today? Isn't it like Provincial Cup Day or something like that?
It's a civic holiday in Canada. I'm supposed to have today off. So Canada likes to have a holiday every month. And if we don't get a holiday every month, we get angry. So they basically just make up a holiday in August. They call it the civic holiday, a holiday to have a holiday. So that always happens on, I think it's the first, I can never participate, but it's the first Monday of August. And obviously I'm not participating here because I'm working. So, and I'm on the radio show live for you guys, despite supposed to be having a holiday today.
All right. Well, we had some earnings. Let's start with Berkshire Hathaway. They like to sneak it out on a Saturday. I think most people know that. I think Mr. Buffett doesn't want, the street impacting his stock, but good report here, trading up 4 sticks. Spencer, what do you have?
Yeah, Berkshire reporting the Q2 EPS. So 7,301 per Class A share versus 25.92 in the same quarter last year. That's $4.88 per Class B share versus $1.73 year over year. So either way, whatever class of shares you're looking at, good year over year growth. Operating earnings 6.9 versus $4.12 billion again. That's on a year over year basis. So good year over year growth for Burke.
It's a good pop for Burke. Remember, Burke is still a fund, so it's all about their holdings, really, and you get these spike ups, and sometimes it can be short-lived because it's not like it's all about NAV there, but it depends. I mean, sometimes stocks can hold the gains for a bit too, but value plays are back in favor a little bit as of late as well, and we know Warren Buffett's more of a value investor, so it's probably why you've seen Berkshire Hathaway doing pretty good, I'd say, over the course of July. Had a pretty good month. Was down at 185 all the way back up into the 200s. They have a huge Apple position that did not hurt them at all. Right. Obviously, when Apple reported and blew the numbers away, and obviously trades significantly higher. So I think Burke's one of the biggest Apple shareholders there is out there now. So you're going to get pop here, $4, but I'm not going to chase it because this is a fund, and when you see these funds get these big pops, it can be sometimes short-lived, at least statistically speaking. So not necessarily fading in here. I think I'm hands off, though, not chasing the move.
And we did take out the former all-time high. I'll just give you that. Your former all-time high is 201.40. That was made on July 18th. Your pre-market high is above that level. So I don't know if you get some people coming in with some profit taking or not, but I would just keep an eye on that 214. Right now, it's acting as support. It is leaking a little bit. We traded up to 206.30. And you know what? I just wanted to mention one stock we were talking about on Friday, and we were looking for some continuation. Take Two. I don't know, Dennis, if you can remember all the way back to Friday, but that stock was trading 128, 129, and it looked like
it opened on the highs and gave it back.
I know. And I looked at the weekly 128 option market shortly after the open, and it was like $1.50 wide. So I'm like, okay, all right, couldn't
they
get
still
in
want
there.
$1.50 for the options, even with nothing left.
Yeah, and it was trading at I know. I'm thinking, okay, you need a big move, but people just don't trade those. There's not, and that's
it's so hard.
Yeah, you would have to trade the stock.
When you trade Bank of America options or thicker stocks, I mean, you're gonna have a little better market, but it's difficult. And Take Two is fairly actively traded, but it's not going to give you, a nickel market or a penny. I guess this is nickel markets there on the options. Is it still? There's still penny options in some.
Yeah, they do.
Right?
They do. I think for some of these more liquid ones, they go up to a nickel and stuff. But when it's $1.30 at.
When you're playing $1.30 on a spread, it's so hard to make money.
Exactly.
I mean, you can try to get, and not pay the spread, but it's difficult because there's so many other option market makers. The systems just join you there. So you could be on the bid. Somebody could try to hit you, and it's going to go to another option market maker because they're controlling all the flow. So it's tricky to get filled on the bid and the offer on anything, especially in the options market.
All right, Spencer, you want to keep the earnings going here? We got guests coming on at 8:15, so why don't we just rattle off some earnings here, and then we'll get to Fari.
All right, let's start with Tyson because I know you guys want to talk about the food stocks. So TSN, what?
So don't call me chicken.
Okay. Tyson Q3 adjusted EPS $1.50, beat by a penny on the estimate. Sales 10.05 versus $10.3 billion. The guidance for the fiscal year was a little bit light. Actually, it was in line, $40 to $41 billion, and that is in line with the estimate.
Part of me wanted to buy this into the report and just take it through the report because I saw what happened with Kraft Heinz. Obviously, I had Kraft Heinz. A longer-term portfolio, I could not help myself. I had to book the gain on Friday. I know you held on to it, Joel, but that was just such an incredible move for KHC. That's one of the biggest moves I've ever seen KHC make. So I kind of wanted, Tyson was basically a dog into the report. I was like, man, they say anything okay, this thing's probably going to pop. Not really happening here this morning. I mean, it tried to pop up. It went up. It's very light volume. We saw it go up to 59.50. It's already starting to leak, though, and starting to get some offers forming, too, at 58.60, 58.75. So this does not look, at least in the pre-market, like it wants to pull a Kraft Heinz here. Kind of weak going in, really considering, and it's been weak after. And I don't know what's wrong with this stock, because a lot of the other food stocks have come back a long ways from the lows. This one continues to make new lows, really, when you look at it here. So Tyson not participating with the other food stocks.
Well, someone got excited, took it up to 59.60, only a couple thousand shares traded up there. Now you've come down, still up 85 cents at 58.60. Looking at yesterday's range, let's see if we can get it at 58. 57.95 was the high. That fills the gap. And Spencer, pull up a monthly chart here because you are on some major monthly support here. If you're looking at a swing trade, 55.72 was a low. This was back in 16, 55.94, a couple in the 56 and 57 handles. So basis monthly support here, you have an out. It's just hanging out here perhaps a little bit too long.
I would not want to see it start making new lows on the move, though. And the low on the move so far is 56.79. This does not look like it wants to go in the pre-market. So we look at, when this is the reason we started the show, Joel, back 5 years ago, was we used pre-market action to kind of give us a feel for where the stock might go in the regular session, or to give us a tell early. And even though the stock has only traded 6,300 shares, and it can still, do some funny things, it just feels to me like it does not want to go. I know it's up 85 cents, but there's some offers forming. Nobody's lifting the offers. Nobody's that excited here. It's not like with Kraft Heinz, where it seemed like every time somebody's offering it, in the pre-market there, they were lifting the offers. It's not the case here. So this feels heavy to me. This feels like it could actually go red. I'm not saying I have no position on Tyson Foods. And I don't think I intend to put a position on it because it's still food stock, and the food stocks are kind of back in favor, but it's not responding well to these earnings in the pre-market. Did they give guidance, Spencer?
Tyson, it was.
Say it again though.
The sales guidance was in line for the fiscal year. It was 40 to 41 billion versus a 40.59 estimate.
Yeah, so not great. They want to see a raise. I'm concerned this could get back to gains actually and go red. So I'm not trading it. I'm probably not going to trade it. It's just a feeling I have right now that this actually feels like it wants to go a little bit lower.
The closing price of 57.55. Actually, to me, I'm looking at the 57 handle. You've had 1, 2, 3, 4 closes within a 20-cent range between 55 and 55.55, 57.75. So
valuation is good. Lobster saying they're going to make $5.70 to $6 on 581 estimates. Valuation thing looks like it's trading with a 10 multiple. From that perspective, it's cheap, but that doesn't matter sometimes, and it's all about if they're in favor or not. This one obviously has been completely out of favor, and it's an okay report, and they're just not lifting on it. And when they don't lift on it, that's concerning. If it wanted to go, I think it should have went already. But we'll see what happens when the real volume comes in at 9:30. Things can reverse and start to look good here again. We know we saw Kraft Heinz had a wild pre-market on Friday where it was way up at 64, then some guidance gave all the way back to 60 before it started rallying all the way back up to 65. So it was a wild move for KHC. Maybe Tyson's going to be wild, but right now it looks like a whimper.
Jim Harbaugh's comments may be hurting Tyson Chicken. He told one of his quarterbacks that not to eat any more chicken because it's a nervous bird. So that might be weighing on the stock today. Spencer, 8:13 and change here. You want to get 1 or 2 more reports in?
Yeah, let's go to Cardinal Health. CAH reporting this morning $1.01 EPS versus a 93-cent estimate. Sales of 35.35 billion versus 34.38. So a beat on the sales number and a beat on the EPS number. The fiscal year EPS guidance was light, but I would say in line, but I would say on the light side of the range. $4.90 to $5.15 was the range that they gave, and $5.10 was the estimate. So in line with that estimate, but mostly on the light end for the fiscal year EPS guidance.
Okay report. I'm not doing cartwheels here on this one, especially with that guidance though. I put this in my long-term invest portfolio a couple weeks ago. Reason, just valuation. I think the thing's supposed to make $5. It's trading with a 10 multiple. It's got a 3.77% dividend. It's in my long-term basically retirement account there. So I'm planning on not selling it. When I stick them in there, I'm sticking them in there just because I like the value. And sometimes I take some major heat on those for a while, but when I look back at them, usually 3 or 4 or 5 years later, I usually make money. I'm just playing the value trade on this one. No trade though, just value investment in this one. I did it a couple of weeks ago. I like the fact it's not going down anymore. I like the fact that value stocks are a little bit back into favor. But this is not a great report. I wouldn't be surprised if it leaks. It's hard to say. It's 50-50's got an iceberg there right now. So there's somebody willing to buy the stock at 50-50. Takes that out, starts going red, it'd be concerning though. So keep an eye on this. I'm not doing any trades on it.
Same person who was out there selling on Tuesday and Friday is out there selling in the pre-market. 51 even is your pre. Eh? Yeah, 51. And then you had highs at 50.97 and 50.99. So those are your highs for Tuesday and Friday. Spencer, let's dial in Fari and give him a proper introduction.
You want to bring him on live?
Yeah, because we don't know. Kneecap.
All right.
It's been Watch Commander. He's going to say Watch.
It's been a while since we called Fari. So
Watch Commander.
He's going to say something new. I'm going with something new.
We'll say what he's going to say.
The last time we had Fari on, I want to say it's been a while. Let's see.
I know he's pumped for it. He was just
Fari, you with us?
So.
Pardon me?
Hey, Fari, how's it going?
We're good. I thought you guys were going to come in on Skype.
Oh, I'm sorry.
He's got video.
I dialed your phone.
No, he doesn't want to do video today. We were just going to do audio Skypes.
Audio Skype so I can show you some charts.
Fari, okay, here. You know what? Let's do that. So I'll call you back right now. Hold on one second.
Yeah, okay.
I apologize. Yeah, we did say I would call Fari.
I did not expect to pardon me. I went with Watch Commander. Pardon me. You were right. It was something new.
Brings his wealth of knowledge and aggressive equity options trading and index trading, plus just a magnetic personality. And one of our great.
Good morning.
Nice. Good morning, Fari.
Welcome,
on, buddy.
Sorry, guys. I just got my T-shirts on, so I want to put this thing on a jumbotron. I'm going to show it to you in a second. Share screen. All right.
It's going to give us some charts.
The website. You got to be going right up there.
Oh boy!
You see the stuff that's happened. And so, if you guys can give me a slice of this, it would be really great. Right in the center there, okay, of the new website. This is all the cloud. The problem is we can't reach everybody from California. We have to go to the cloud because the population is international.
So, let's show these charts.
All right, Fari, show us some charts.
There you go. Let's do the charts.
Okay.
Here we go.
Whoa.
Welcome to the Watch Commander's Space Center here. There's a lot going on here at Fari. You got to explain some of this to us.
No worries. We'll be doing it in our package. It's a Power PMT, but simply what it does is that it gives us a bias coming in for the next 2 or 3 days. It's not longer than that. The accuracy, the cone of accuracy drops, obviously. So right now what we did, we had a tough week last week. We had a good Wednesday, which was week before last. This is the bar right there. This is when the FB missed. So we rallied hard to it. FB missed. We're putting 28.40. 28.49. That's the new target, which is 9 handles from now. You know, a good drop on a Friday because GDP was up. We meandered down further on Monday. If you do the count, 1, 2, 3, we also almost touched the 0 sig, which is 20-day. That usually sets up for a buy, but you need confirmation. So boom, couple of days. We didn't go below it. Then they bought it on Thursday. That was a key day. Now we're back on a bullish stat. Somewhere in here, you could not defend you're going to be bullish. Not just you were wrong after the fact. We're talking about a priori. That means right now thinking, well, I should be doing. And of course, this is an NDX. They had a bloodbath, as you guys could saw. What happened? It's just one day after another. Now, Tesla was helpful, and we're up now. We got to get. Here's the all-time high, 75.11. That's on the cash. I will be watching for that. And of course, 28.73. If I pull back and go to weekly and get a little bit longer term, you'll see. In our humble opinion, we're set up to go to all-time highs now. We got to break this out. Maybe
so still bullish, despite us losing a couple of the things. We lost Facebook, we lost Netflix. We know Google did okay. We know Apple did excellent here. Amazon did all right, but it kind of leaked the gains here. So you're still bullish, even though Facebook is still significantly out the highs, and Netflix is significantly out the highs as well.
Right, but hold up. Here's the issue. Amazon and Google delivered very well. The shares did not show it that way, but the reports did. Remember, you get juiced up before. Your volatility, your implied volatility goes very high.
Right.
They'll come back. They'll come back. Netflix has got an issue. Facebook has got a longer-term organizational issue. They have to, or structural issue. They have to deal with it. But a lot of our earnings have been very strong. Now, part of that reason is the fact that, let me go through some other stuff so you guys take a look. The trenders. Oh, I'm saying this. Part of the fact is buybacks. Buybacks long-term are not very, very good for the economy. It's not good because it stifles the innovation. They're good for today's shareholder, immediate chart pattern. But longer term, stifles design, innovation, and risk-taking. But the buybacks have been good, and also rates have been low. Look at the rates. Speak of Murray and Murray, our dear friends in Beverly Hills, he loves this. We went to 3.0. Now, for months, everybody and his brother have been saying we got to go over 3.0, and we did. It did that. It pulled back. But this is the term structure. You have the 90-day, 5-year, 10, and 30, and these are monthly levels. These are daily bars over a monthly support resistance level. So we pulled up. That's nice. We've got to continue to pull up. I believe the economy is going to get better as the wage growth come in. Wage growth, not job growth, wage growth. As wage growth comes in, there's a price to pay. As called interest rates have to reprice and be adjusted. And you could see the comments from Chairman Powell, not Dr. He's not a PhD. Dr. Powell, head of Fed. They're getting ready for that. I don't care what Grompino says. Fed has to be independent. They got to do what's right. But my hope is they don't do stifling. They don't go too strong. They won't give it 50 points. Just gradual 25 basis points will be fine. And so, but this is the key indicator of what's happening. Also, from the structural, the covenant with the net savers will come back in. We've lost that for about 10 years now. We've got to bring that back in so we don't have super hyper speculation on the stock side or by people who don't understand it, nor they can handle the risk, which is our retirees. Okay, so let's come back here a little bit on what we call detrender. A lot of money managers look at this. This is a differential between the price action of key sector names, you can do it by individuals too, but of sector names versus their 50 bar and 200 bar. So this is a 50 bar, this is a 200 bar. And you can go back and make a case for what anomalies are. You could see, for example, what happened in January. This is a warning sign where it rises so high. If you draw a line, we weren't up there. This is more statistically valid area. When you go above that, you're going to be on alert. Same thing down here. Look at these are the areas where normal. When you go above that, you get into trouble. So,
Fari, let me hop in here for a second.
Yes,
We have different people on the show. We have Nick Shaheen. He comes on. He's looking for all-time highs. I think, basically where the market is at this level, of course, for, my long-term investments, I want to see new all-time highs here. But when I look at a longer-term chart in the S&P, I just kind of think, man, are we in a trading range? Are we just probing the top of this trading range? And we're just, there's more work to be done because you've been in the markets for years. It doesn't go up every single year, 6, 8, 12%. There's years, there could be 1, 2, 3 years of consolidation here. Or a trading range? What are you using? I know you like to do daily numbers like me, but what are you using? A poke under 2,800. What are you using to say, okay, we're not going to do all-time highs. We're in a trading range.
Well, a couple of stuff. First of all, downside is a little bit easier to pick. Okay, as we know. I'm talking, this is a weekly chart, by the way. It goes back, monthly chart. It goes back to 99. Down here, the bottoms are easier to pick than tops. Why? Nervousness. For example, I can look at VIX put call ratios. I can look at VX, for example. Here's another chart I would use. And there's a write-up on this chart. VIX differentials between the VIX futures, the lead month, and 3 months forward or 4 months forward. Sometimes there's no discount. There's very little discount between the two. When the front month goes crazy and goes up, that's a bottom. But it means that this value, this chart, will be positive. Okay, that's on the bottom side. On the top side is reversal. This baby goes, this gets very negative. This number gets very negative. Let's say 0.3 and a half. I'm saying that negative 3.5, maybe negative 4. Then we're not gonna make the new high. We're just way too frothy. The way you cross new high is that you have a steady trend, a steady normal market as you approach the new high. This is not normal. That's not parabolic. This was parabolic. So it had to be broken down. It had to get back in the range here and catch up. Remember, if you go really long back, if you look at it weekly, yes, we are in a trend. We're in a somewhat over trending range. But look at the monthly, we're breaking out. And these are some of the structural changes we've done, mainly deregulation. One of the problems we could have if the Democrats come back in and put back in November and put some deregulation, put some regulation back on. And then, we'll probably meander up here and should pull back.
I mean, I look at those monthlies and it's just, it just looks like it's been a crazy 7 or 8 years here. It just puts it really in perspective when you stop and look at that, how strong the U.S. markets have been. And I would gather if you put a lot of other markets charts up there from other places in the world, it doesn't look anything like that. We've just had such strength in the U.S. markets for a long time. I mean, aren't we eventually due for that down year that Joel's talking about somewhere in here? Or should we just keep riding the momentum and riding the train until the train stops?
Here's, let's see. Here's the election area. Okay, this is the election area. So here's the 666, the all-time. That was the financial crisis low. Yes, great. What do you call it? Whatever, that depression, but whatever you call it. Low. Now this was overdone. I think we could be overdone here. I don't think we were overdone there because there was an uncertainty in the front. Look what kind of months we had. As a matter of fact, one of my best years were 2015 in trading because the volatility was there. Actually, last year was not an easy time to trade for trading purposes. If you were invested, yes, you just, you'd be happy as a clam. You buy it, put it in a shoebox, and you go away fishing. When you come back, there's more fish in there for you. That's how it works. Now we're getting a two-way market. Didn't have a two-way market. I in terms of there's an argument out there, by the way, that if something goes wrong, we have to challenge. Let's see, is this in November? Yeah, we have to challenge this low. Okay, this low, the October low, which would be around 2100.
Wow.
2100 area. This is the 16th. This is election time. This is not election. This is 15.
Hey, Fari, before we let you go, I just wanted to get a Sigma reading on Apple here. Great report. Gapping go. Barron's is saying, you should hold on to your Apple shares. Where are we at? Like Sigma 9 on this? Where are we at on Apple?
Right now for you. Hold on. There we go. Okay, here's Apple on the daily chart. We're at 3.
Only a 3?
Yeah. On the daily chart. On the weekly chart, I suspect we were at 2. We're at 2 on weekly chart. Yeah. I don't know. This got ways to go. It doesn't run up. It's got ways to go. The volume was good. Yeah. Remember, they had a terrific. By the way, we missed on Apple, our firm, but they had a terrific. Numbers speak for themselves. They had a terrific quarter, one of the best ever. Keep in mind, though, they need new products. The space they're in is very, very mature now by tech standards. Okay, not by other industries, by tech standards. With 10 years into it, it's very mature.
All right, Fari, we're heading up against the clock.
Yes.
Fari, we're heading up against the clock, so we're going to have to let you go. But thanks for joining us, and have a good rest of the day.
You got it. Thank you, guys.
Thanks, Fari. We'll talk to you soon. Yes, S&P futures leaking a little bit here at 2839.50. That's unchanged on the session. So we'll see. Challenge that pre-market high first, trying to stay green. Dennis, real quick, in the Google YouTube chat, Qualcomm continues to rise here. You made a good call on it. Spencer, give us the news, and then Dennis, you could recap. I think that was
a rating change this morning.
Okay.
Yeah, Qualcomm caught an upgrade this morning from Cowen and Company, upgrading to outperform from market perform, and they are raising their price target from $64 to $80.
It's absolutely amazing just to look at how much a stock can move. And we were talking about this buyback, and yeah, they did the buyback, but then they announced it as a Dutch auction. And I was just saying on the show, and this is why I was saying I made a good call. I mean, these things move up on these Dutch auctions and they gave the range. I can't remember what it was. Was it 60 to 68, Spencer, or was it higher than that? What was the range they gave on the Dutch auction?
You're very close. 60 to 67.50.
Okay, so you do see the one concerning thing I will say here is a Dutch auction on the table here. You typically don't see them trade above the range until what's the date? Did they give the date for you yet? On when they are going to be, they take a while because everybody has to put in their price. But did they give you a range of dates here yet?
I don't have
the
one.
Dutch auction.
Don't have one.
Okay. Anyways, it typically when the Dutch auction's going on, you got to know these things. They typically won't trade above those prices. So I would say 67.50 probably puts a cap on it. So if you're coming in here buying Qualcomm at 66.60, you're buying it towards the upper end of the Dutch auction range. So upgrades and downgrades matter. And yes, it's going to be up here today. Just remember at the upper end of the range, you probably got ARB selling the stock. So I think, if you're looking at it today at 67.50, anywhere in there, I think it struggles to get above there because that's where the Dutch auction, the upper pricing of the Dutch auction is. So keep that in mind. I would actually probably, if I was trading it, probably playing it from the short side in the 67s. I'm long this in my investment account. I've been long it for a while, probably about 6 months here now. It's actually, I took a lot of heat on it, went all the way down to 50 on me, but it's all the way back up. It's one of Sean's picks, Sean Udall, who found the show. I'm sticking with it long term, but the Dutch auction is on right now, so keep that in mind. Upper range, 67.50. I'd probably be a seller there, although I'm not selling out of my investment, although I might trade it.
I'm looking at the monthly charts, and I see some highs at 68 and 69. So if you want as a target, do a little research, because I remember when Herbalife did this, that like everyone thought that it was going to be like within the range that it's stated, and it came out like much higher. I don't have the exact details on it, but I mean, instead of trying to pick a resistance, just let it go up and try and pick an area on the downside. $70 just looked like a wall. And then what did I
mean, with this Dutch auction though, Joel, you're giving prices that
okay.
I think in my opinion, and yeah, if you're just not considering, just looking pure at the technicals, these are good resistance levels you're getting. I don't think it's got the gas to get up to there, because I think the ARBs will overpower. I mean, sometimes natural buyers can come in and push stocks above ARB prices, but I think your ARBs will probably be, I think there's a lot of arbitrage people who are buying this thing probably over the course of the last few days, in the lower 60s, especially after they did, and then it got the gap up. And it's still at 63, and there's ARBs that are playing this thing still, even though it wasn't at the lower end of the range when they announced the Dutch auction. I just think when you get to that upper end, I think there's ARBs up there willing to sell probably everywhere around 67.5. So I think it really struggles to get over that level. Maybe I'm wrong. Maybe the natural buyers are, it's got a lot of momentum going. It's got a lot of push. Maybe it can push it above it. But when you've got natural arbitrage pricing above here, I think it struggles to go over there. That's my opinion. So I don't think you have any chance of getting near 70, in my opinion.
And what did Broadcom want to pay for this company?
$80. That's why I was in it. I was like, I was buying it at 60, there was an 80 offer on the table. And I was like, well, even if it doesn't go, I like the dividend. I didn't mind it from a valuation perspective. I had no idea they were going to take this thing like $48 after that fact. So obviously I would have been a lot better off to sell it and then to rebuy it down in the lower 50s. But, hindsight's 2020. I just held through it all. So I'm actually back up in the position. I think I got in around 62. I'm going to stick with it. Like I said, my long-term investment portfolio. But as a trade, I think if you're trading this in short term, I'd be very cautious if you're coming here buying it long at 66.5 with the arbitrage pricing, from the Dutch auction up at the upper end up at 67.5. And a question from JJ in the chat. He's just asking what the Dutch auction thing is. So a Dutch auction, we explained this a couple of days on the show. You can go listen to that too. I'll just quickly say Dutch auction before Angie comes on. Dutch auction is another way of doing a buyback that a lot of companies are doing lately, and I think this is a better way that gets the stock price up if that's what the company's trying to accomplish. Basically, all investors they'll put a pricing range out there, which Spencer just said 60 to 67.5. So that's the pricing range of the Dutch auction. They don't know what price they're going to actually do the buyback, but they're trying to buy it all back at a certain price. Investors will give them a price that they're willing to sell. So they'll tender a price. If I tender a price out on my shares at $64 and the Dutch auction price comes in at 63.5, I will not sell my stock because it's above my tender price was above where the price clears. If I tender a price of 63 and it comes in at 63.5, then I would get 63.5 for my shares. So when you're trading it from an arbitrage perspective, the whole idea is if you want to sell into it, you want to price it high enough that you're getting the price that you want, but you want to price it low enough that you're actually participating. So that's why, there's going to be ARBs that are willing to sell this thing at 67.5 at the upper end of the range. And now you get the stock almost naturally trading up to that price. Makes me think that the stock, unless it can, get, significantly above there, and then they're not going to be able to do any of this buyback at all in this Dutch auction. It makes me think as it gets to the upper end, there's probably a lot of ARBs that are willing to sell it up at 67.5. So usually the stock will trade within that range until the Dutch auction is done. And that range right now is 60 to 67.5. Find out the date. I don't know the date on it. I can do some research and get back to you on it. Somebody knows it, let us know in the chat, but I've not seen a date announced on this yet of when they're actually going to be doing, the final or when the Dutch auction is over.
All right, 8:36 now. We're going to take our second break of the day. We're going to grab Angie Setzer. She is the vice president of the Grain for Citizens Elevator, has spent about 15 years in the industry, and we'll be talking how tariffs has kind of affected her life in a moment when we come right back.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. Spencer Israel working the boards, and we are joined by Angie Setzer. She's the vice president of Grain for Citizens Elevator. Angie, how you doing today?
I'm great. How are you guys?
We're doing good. So first of all, she's a great follow on Twitter. She's one of my 23 people I follow on Twitter, at Goddess of Grain. And two questions. Well, first, informational. People don't know this, but Benzinga is responsible for her marriage to the King of Corn, right? Carl, right? We had you both on the show a couple years ago, and you guys added to your position in life, right? You got a little, what is he, like 2 now?
Yeah.
Okay.
He's 2, turned 2 at the end of May. So he is currently, I'm watching him on camera, watching Sesame Street right now, and later we'll discuss how he wants to manage his wheat position. So that's
so
what we'll work on.
let's talk about these grain markets, okay? We could start out with wheat. I mean, so your view, you're dealing with the farmers, right? You're dealing with the people that are directly impacted by these actions. Was this something that you kind of, when Mr. Trump took the White House, you thought something that this was a possibility? Are you totally blindsided? Give us that perspective.
No. It's been something that we've discussed since the election. So, it was a concern of mine, and something that I talked with a lot of the farmers about, throughout the election. And so I joke a lot of times, I call it Trumpnesia, which is the act of forgetting what Donald Trump says and then acting surprised when he says it again later on. And that's really in this instance in particular, it was all of a sudden it seemed to just hit the market. And so he had brought it up throughout the election that he was going to crack down on China. We knew it was coming. China's our biggest trade partner when it comes to soybeans, but the soybean market really didn't do much about it until, really we saw it take a hit, come Memorial Day weekend, directly after. I mean, I think we're around $10.50 for November soybeans the Friday before Memorial Day. And so a lot of customers have been exceptionally aggressive when it came to selling their old crop beans, liquidating what was in the bin, much prior to summer, a lot earlier than normal, you could say even. And then, we had a lot of new crop sales made, prior to the downturn. Of course, you never sell enough when the market goes lower like it has. I mean, we've lost $1.50, $2 at one point in time on soybeans, and so you never have enough sold. It doesn't matter if you've sold 300%. You'd wish you'd done 500. And so we've had some sales. Farmers weren't necessarily blindsided, but you can definitely see the political divide showing up. Some are, very much, we'll deal with it. We'll do what we have to do. He's doing, work for the, God, for the lack of a better term, greater good. And then the other half is very unhappy about being dragged into this situation. And of course, I think we're all exhausted by it. It seems like, last week, Tuesday, we were going to talk with China, and then Tuesday night, we were going to actually increase the tariff to 25% from 10% on the additional tariffs that we were putting into place. Friday, China's coming at us again. Friday night, we're going to work it out. And so there's a little bit of tariff exhaustion, you could say, too, where all of us are getting tired of dealing with it. But the market also seems to be getting tired of dealing with it and seems less likely to move aggressively, depending on the day, of course, depending on what the headline looks like.
So and a lot of these farmers are people that put Mr. Trump in the White House, correct? I mean, not speaking for all of them. Do you think that this changes their political opinion going into the midterm elections?
I'm not going to lie. There are some that it has. Some have reached out to me and will be first-time voters for the Democratic Party or the independent candidate. I think a lot of them are being pushed more toward the independent side of things, of course, because of where they lean from a fiscal standpoint. But a lot of others are confident, and there were a lot that weren't. I mean, I sat in a peer group ahead of the election, and I was absolutely amazed because everyone in that room was going to vote for Hillary that election because they were concerned over the tariff conversation. Now, when I say everyone, it was, a handful of folks. It wasn't like it was a great indicator of the whole farm mentality. But I mean, there were some that voted in that direction. But the thing is, what does farming account for across the U.S. population? Like 3%. So it's always funny to me when I hear folks say, well, farmers put him in the White House. No, they may have had they may have leaned in that direction, but reality is, there's still a small statistic, and it's like saying that, they're a small portion of the population, and so they may historically lean Republican, and they may continue depending on what the Republican Party looks like as we move ahead. But a lot of them did so for other reasons, and now maybe they're paying the piper. I'm not sure, but most of them would say, at least that I talk to, even if they are frustrated, they somewhat understand, or at least they hope we move in the direction that Trump says we're moving towards, which is kind of some more open trade and reduction of some of those boundaries that we see with China right now.
So wheat's holding up a little bit better here. I'm looking at the daily wheat chart, bottomed under 480 a bushel here at 471 and a quarter. Yeah. Now back up at 560. So just give us how the wheat. I bet you the wheat farmers are a lot happier than the soybean farmers.
Yeah, for sure. I mean, and wheat's been paying its dues for 3-4 years now. I had a lot of guys that sold wheat last year for $3.80 at the end of harvest. And, this year they're looking at $5.50 if they still have bushels available. Most sold at 40 cents ago because it was a good price and they had good yields in Michigan and they were happy. Wheat finally is caught up. Everyone's been talking for the last 5 years or so about, we're awash in wheat. Global supplies are huge of wheat. Everyone's been paying attention to the Black Sea region, things of that nature. And now we're starting to recognize the fact that, okay, you remove China whose wheat's not coming in. It's poor quality. It's got a lot of issues. Chinese wheat does. You take that out of the global stocks equation, you're taking over half of the global stocks away. China accounts for 52% of the world's wheat holdings right now. So you take that out, you look at what's going on with the world's main primary exporters, and they have the second smallest carryout on record. So the idea right now, we're trying to figure out what exactly is going on. There was a rumor last week that came out that Ukraine was going to limit the amount of milling quality wheat exported. You got to love social media. Apparently it came from Facebook and was relatively unfounded, but it made its way to Bloomberg and Reuters and other headlines. And then the ag minister from Ukraine came out and said, that's not true. And so, we saw the wheat market up limit, I think up 30 cents at one point in time, and then it kind of backed off a bit. And the one thing that that's doing is it's giving folks an opportunity to look out towards next year as well, because they're going to be planting winter wheat here in the next, starting in October into November. And so they're looking at next year and penciling out the fact that they can sell $6 wheat today. And that is much better than soybeans and even better than corn. So I have folks right now that are looking to increase wheat acres. I've had conversations with people on Twitter that they haven't ever had wheat on the farm, or maybe they haven't planted it in 5 years or so. The gal said they haven't had wheat on since 2012. They're going to put wheat in this year. And so there's this conversation right now of folks trying to push down like corn, simply because of the idea that come next spring, we're going to have this huge amount. A group came out this past week and said we're going to have 95 million acres of corn planted next year. I think it's bogus. That's a silly assumption. That's, first of all, assuming that farmers follow price versus rotation, which is not accurate. Most farmers, 2/3 in the poll that I put out, go by rotation, which means if they plant soybeans one year, they plant corn the next year, and then they plant soybeans again. And so they follow what we call a rotation. 2/3 will follow that rotation versus price. And then on top of that, you chew into some, acreage that would be corn or beans by putting in wheat. Now, wheat's grown specifically Illinois, Indiana, Ohio, Michigan, Missouri are the areas that I'm talking about in the Corn Belt that will plant wheat. Nebraska can plant some, but they're not big on it. And then the Northern Plains. So that will cut into some acres there and definitely make for something that's pretty interesting, to see. But it's been a long time since, we saw wheat above $6 last year, but it lasted for about 2 days. So to see this actually have some support
Angie,
to it.
We're up against the clock here. I just want to talk to you here. Spinner made a good point here. These stocks that are related to farming, you have CF Industries taking off, and you have ADM. The chart looks pretty good. NTR, are you active in those stocks at all, or do you have any reason why, to see this, going the opposite? Go ahead, fill us in.
Well, yeah, ADM is a crusher. So they're a soybean crusher, and we've seen crush margin take off phenomenally. So what you're making when you buy a bushel of soybeans and then you crush it into soybean meal and oil, because of the drought in Argentina, the world meal market is on fire. So crush margin has been phenomenal for ADM. That's definitely helped. They're a grain handler. So, when you have a lot of grain left over and you see good carries in the market, when there's a solid spread that's paying you to hold grain, they tend to make money. So ADM should be working in that direction. CF is an input supplier. So the idea that we would have 95 million acres of corn next year would increase the need for anhydrous and other products that they sell from a fertilizer standpoint. Like I said, I'm not saying that we'll see that 95, but the demand will be there. And so, yeah, your farm related stocks should stay strong, simply because there have been marketing opportunities. There have been some good places for people to get crops sold. There is an optimistic feel for some growers, for a lot of growers out there. And so there's a reason that we would see support stay underneath those market structures.
Angie Setzer has been on with us. She is the Vice President of Grain for Citizens Elevator. Angie, thanks so much for the time today, and have a good one.
Oh, thanks for having me. You too.
All right. 849 out.
futures, yeah, leaking a little bit here. We're down $1.50 at 28.38. We've lost our closing price of 28.39.50. That was the Friday close. That was the high for the week. So not getting the Monday follow through as of yet. I just alerted our traders under that pre-market low of 28.35. Friday's low is a good 10 handles lower. So be keeping an eye on that pre-market low.
Just looking here at some imbalances. We've got Berkshire Hathaway. We already talked about them off the earnings. It's trading up at 205 and it's got 101,000 to buy. That's a standout there. We do have quite a few big imbalances here. This one, Pfizer, 161,000 to sell. That's going the opposite direction. Well, I guess it's not the opposite direction anymore to the overall market because the market's leaked into the red here now. I'm looking at Disney, 69,000 to buy. I want to stop on Disney because this stock is due to report. Is it Tuesday? Disney?
I think so, yeah.
Anyways, so you're coming into, that's going to be the major report of the week, really. The stock has been hot going into this report. I do have this in my long-term retirement account. I put it in there at 102. Wish I would have bought some for a trade too, but I just bought a little bit for an investment there. House Mouse, I mean, it's come back a long ways here. It's run up into the report, really. It's a pretty big move. I mean, you're talking about a 10 or 12 point move here for Disney, which, typically doesn't move that. So if you look at the overall range from the last couple of years, you're actually starting to come in towards the upper end of the range. All-time highs up at 122. You're within striking distance of that now here as well. Thoughts on Disney going into Tuesday night's report?
Trading up in the pre-market. You've had spikes here. Opening at an interesting level. 114.68 was your high on July 19th. And here we are, trading at that level in the pre-market with the SPOOs going the other way. So you might see some people lightening up ahead of the report. I like that 114.68 number. In the pre-market, it's even stalling right there at 114.85, 114.70 was a high over the last few brackets. Dennis, you see anything at like 115 that people might be leaning on, or is it up?
Hang on, let's go look at the book. Let's see if there's something in there.
JV Stack read my mind. He said Disney has a huge offer at 115.
I'll go look too, just to verify that. Disney, yeah, we're looking. Oh, wow. Oh, so here it is. So $14.99. So somebody's pennying, when you step one penny in front of a big offer, it's called pennying it. Someone's pennying the 115. So at 114.99, there's an institution actually pennying the bigger offer. 83,000 at 114.99. And then there's 565,000 shares at 115. So great call on that. That is enormous position. So just do the math. 506. So basically call
my calculator
between $14.99 and 115. This is stuff that's being shown. There's 650,000 shares there to go. So 650,000 shares times $114 stock. What is that? Carry the zero over a couple. What are you talking about there?
I can't even do the air math on that.
It's $65 million. Is that right, Spencer? Did I do the air math right?
Wait, say it again.
So 650,000 shares. So 650,000.
Oh, it's more than that.
Times 115 bucks.
Yep.
It's $74 million. So it's going to take $74 million worth of buying power to push it through 115. I mean, that's tough. Even in an earnings report, that could be tough. So they're going to have to blow it away to get it through 115. You're right, Joel. If I had this on for a trade, I'd be concerned going to the report just because of that order. $74 million worth of Disney's get to take. And it can do. I mean, it trades way more than that in a day. So they blow it out. It will go above there. But pre-market volumes, that's some volume there to take that out tomorrow. I don't think, we'll see what it does today, but you made a good call there. It's going to have struggles there, at least today, taking that out. I mean, get a little running start out today. Maybe, we're up 50 cents here, but you're coming into that wall of resistance there. I'd say above, you go 115.01, 115.02, you start trading above it, then, maybe it's in breakout mode to 116 again, but 115, that's huge. One of the biggest orders I've ever seen in Disney.
I was gonna mention that, and I also just want to make a couple other points on that. There's people that are looking at that order. I mean, obviously, it's still 35 cents away. If you're short a boatload of it, you're really keeping an eye on that order. If you can identify some kind of arbitrage opportunity, if the stock gets to that level, people are eyeing it up, but I don't think it has just a short interest. I don't have it in front of me, but if you were short a boatload, you would definitely be keeping an eye on that. Also, you can get the tractor beam action. If it does get up there, it could go 114.99.
It could go fast.
Yeah.
It's hard to lean on it like during the regular session, like an overnight lean maybe, but it's hard. So you look at this, and Disney's due to report Tuesday night. So if we can't take it out today, you can lean on it overnight. But then you go, I don't know if I want to go short into the earnings report, because in an earnings report, they blow it away. It'll take that out. But I mean, it takes a lot of money to push it through there. That is a huge order. So some institutions saying, I'm getting out of 115. I've been in this for a long time. I'm going to try to get out. We'll see if they can, but it'll take a lot of buying power today to push that through it.
All right, we got about 5 minutes left here. Any notable ratings? We mentioned the Qualcomm. Dennis, any other ratings that are moving stocks today?
Applied Materials up a count as well. It's up 46 cents here in the pre-market. AMAT's been on a little bit of the comeback trail. I mean, you can look at, Lam Research trades with AMAT a lot too. LRCX had the good report that helped Applied Materials as well. LRCX has given back a little bit of the gain since. Applied Materials is right up there. It's bumped its head against 50 or in the 49 handle a couple times. Can't seem to hold the gains. I mean, out of all the tech stocks, it's kind of been a dog, but it's starting to bark a little bit. It's starting to show some life. There's a nice little 1.6% dividend on Applied Materials as well. It really needs to get above 50 for me to be like, hey, check out Applied Materials. It's starting to look interesting again.
49. It's trading above that here in the pre-market. So that upgrade, I mean, for me, if it comes back to that former resistance area at 49, several highs right there, your last 4 highs stalking the $49 level. So I'd be more inclined to try and buy that as opposed to try and, short it here and bring it in at that level. For our Barron's readers here, not a huge article, 5 cheap tech stocks to look at. Micron, Western Digital, Seagate, LRCX, and AMAT. Just a quick little article, low PEs on the stocks in the tech sector. Dennis, and one stock that, man, I just don't know what to do in. There was a negative ink in Barron's over the weekend here. CBS. I mean, look at they had the report. Everything's up in the air about Moonves. Look at this $53 level here. If it wasn't, if there wasn't so much potential controversy with this stock, I'd be saying it's trying to break out.
Yeah, it is. I think it's a buy on pullbacks. So I know Karen Feinerman's been on CNBC last couple of days on CNBC Fast Money. She's pretty good sometimes too. She's been saying it's a buy on the pull. I agree with Karen here. This stock here, I think, and we saw it with Wynn. And obviously, the casinos have their own trouble now, so it's significantly below. But after the whole Steve Wynn controversy, Wynn actually went up and kissed back up, or actually might have even made new all-time highs there on the move. No, it didn't. But it got back up to 200 after giving back like 50 points on the initial spike down from that. So you're getting a similar situation. The value trade, there's a lot of value here in CBS too. I think content's still king. I think there's buyers below. I have no position on in CBS here right now, but I think I might be a buyer of pullbacks. I'm interested in this one. If it gets back down to the 51s or 52s, I might take another swing at it here just from a trading perspective. Maybe lean on 50 as you're out. Not sure longer term investment, but as a short term trade, I kind of like it here on the pullbacks. Although, you're at risk that there could be some headline here that comes out that could strike the stock down again, but it's kind of out there a little bit. They put this committee again to investigate it. This could take a long time.
Exactly.
I tend to think there's some buyers below here in the lower 50s.
Dennis,
oh, go ahead, Spencer.
I was going to say, I'm going to steal this joke from the YouTube chat, but is Patrick Stewart going back to Star Trek? Is that worth a few points for you? No,
I don't know.
Credit busy
controversy here brewing in the Google YouTube chat. JJ Budd says, aren't a large portion of those orders fakers? And Trader X agrees, and he says, in his opinion, order books are lies. So from your 19 years of trading, primarily New York stocks, give us your take on that.
Order book is this information is absolutely correct during the regular session. Order book during the day is almost useless. That's why I like to look at in the nobody looks at in the pre-market. And that's why only reason I subscribe to the order books is because of the pre-market. And those orders, when you see them at the big whole numbers, I would almost, we can't guarantee anything, but I'll tell you that order is probably real. They're not throwing out typically fake orders in the pre-market. Why? If you put out fake orders in the pre-market, it's very obvious layering. So those, SEC, it's, when you stand out like a sore thumb and you cancel that order before the regular session starts, that is obvious layering tactics. you go to jail for that stuff. So typically you don't see a lot of fake orders being put out there in the pre-market. You can see arbitrage orders. You can see like people enveloping, maybe they're opening orders. But when you see them at the big point like that, and there's big size and the technicals line up with it, it's probably real. So the only reason that I subscribe to the order books is to look at them in the pre-market. You look at them in the regular session, it's not all really fake orders, it's all envelope orders. So it's different. The envelope orders move around as the price moves up. So you'll see orders in the 90% of it's probably envelope orders, which is just HFT market making. So if the stock's trading at like 53 and they got an offer to lean on at 53.05 on a different exchange, they can offer 53.04 and lean on that. And then it's just a lean party. So you get all the envelopes and then there's the arb between the stocks and the indexes as well. And a lot of HFTs just playing that during the regular session as well. So they're just, looking for, sweep ups, little sweep downs as, the stock's gyrations. They're looking to capture these 2, 3, 4, 5 cents in the swing gyrations. That's what the envelope guys are doing during the regular session. So 90% of the stuff you see during the regular sessions, envelope orders are not solid. If you touch them, they move. Yeah, so I completely agree during the regular session. But in the pre-market, that stuff tends to be more real. And that's why I love looking at the books in the pre-market. And I don't think a lot of traders do it. I think there's an edge there. I can see that 115, 114.99. I'm fairly confident that's a real order.
Hey, Dennis, this is not a real widely filed stock. It's also an ADR. You're not seeking any imbalance in RIO, are you? That's RIO.
Yeah, Rio Tinto. I can go take a look here. I mean, Rio Tinto's down significantly here, so it's probably going to have a sell imbalance. Well, nothing yet, but it's an ADR too, so there's just not a lot of interest here. But it's trading down $1.41. In all likelihood, this is an ADR it's already pricing. So this is trading actively over in Europe right now. So what you're seeing in the pre-market over here is just simply the arbitrage. They're playing the arbitrage. So when you take the currency times the European price, you get a current price here, probably 51.26. They'll go 51.24 to 51.28. If they hit them on 51.24, they'll turn around and sell on the other exchange and do the currency arb and do the whole thing. It's worth it for them to do it 2 cents. This is a benefit of high frequency trading. I mean, a lot of people dog high frequency trading, but this is one of the benefits. There's definitely some stuff that I don't like, some of the more aggressive stuff, and I've talked about that and written about that in CFA magazine articles on high frequency trading. But there are some benefits as well, and this is just pure arbitrage. There's HFTs that can make money by coming in here for a 3 cent spread. So they're giving you a spread here. If you would have went back 20 years ago on Rio Tinto and look at it at 9 o'clock in the morning, probably didn't have any market at all. Now you have an active market because they've got the orders to lean on over there. So here, you got a service here, basically 3-4 cent spread that they're providing for you. So I kind of like that. If you've got Rio Tinto, you want to get out of it at 9 o'clock in the morning, you got a 3 cent market right now. And that is thanks to the HFT guys. So not all HFT trading is bad. You can't blanket it all. You got to talk about the strategies. And this arbitrage strategy is helpful to the little guy because it's giving you a 1 or 2 or 3 cent market on a stock like Rio Tinto at 9 o'clock in the morning. I mean, look how active that market is. Look how easily it moves. That's all high frequency market making, just doing the arb against the other exchange and obviously then doing the currency conversion. And they can do that and they can make money with it. And that's a service to you.
All right, that's going to be it for us today. We're going to end the show on that note. Thanks to everyone who joined us in our chats on premarket.benzinga.com and youtube.com/BenzingaTV. Thanks to our guests as well, Angie Setzer and Fari Hamzei. Want to remind you all that all the information and content from our show is for informational purposes only and not meant to be investing advice. On tomorrow's show, we are going to be joined by Nick Shaheen. He joins us every Tuesday. He's the author of Create Income with Option Spreads, and he'll join us at 8:35. But if you want to catch our podcast, you can do so. Oh, we'll also be joined by Ivan Feinseth. Forgot about him. Ivan Feinseth from Tigers Financial Partners. He'll join the show at 8:15. If you want to catch our podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play. I think I got them all. Or just go on YouTube and rewatch the show there. But again, thanks to everyone who joined us today. Hope you all have a good rest of your day, and I hope you join us again on Tuesday.